Hi traders, and welcome to my video on the central pivot range indicator. This is an indicator that will display the pivot points automatically for you on your charts. Okay, so the indicator comprises three pivot levels. This is the central pivot, top central pivot, and the bottom central pivot. Okay, these are important levels where we can expect some reaction from price. You don't need to understand the complete complexities if you don't wish to. I'm not going to get into them in this particular video. I'm just going to explain a strategy that we can implement using the CPR or central pivot range indicator. Okay, so you can see the CPR indicator displayed here on my chart. It's displaying these levels, these pivot levels here. So we got the S1, support 1, the R1, resistance 1. Okay, we've got the open, the high, the low, the close, various other prices as well. Okay, also the historical levels, which can be important depending on if you're short, mid, or long-term trading. Okay, so I'm going to show you how we can capture parts of moves like this one, which has been going for around 50 pips now today. It's worth mentioning a slight limitation, in my opinion, based on this indicator, is that it uses the opening of your broker's server time, okay, which can differ depending where you are, so the levels can be displayed differently. Okay, if your broker is on Eastern Standard Time, Pacific Standard Time, Greenwich Mean Time, European Time, Central European Time, whatever the different time zones in the world your broker could be on, it can display the levels differently. That being said, the strategy is still the same. Okay, so what we're looking for is we're going to trade with the trend. So we can see today we're in a downtrend. Okay, that's obvious. The market's making lower highs. Okay, so we're going to look to time our entry on a pullback in this downtrend. As you can see here from this level, this yellow level here actually holds up quite well as a support initially. Then we have a breakthrough. Okay, then the trend continues downwards. And what we're going to look to is we can trade a breakout of any of these levels. Okay, so for example, if you wanted to trade the support 1 breakout level, you can see that price touched it. We wouldn't trade on that candle as it drops down and touches it. We'd first wait for this pullback here. Okay, then you can see this level acts as resistance. Okay, so that was support, come resistance. So we know that level's holding up well. And as there's a continuation downwards, we can look to enter on the breakout here. Okay, potential stop loss above the high here. And it will just be interesting to see how this trade will play out. Okay, one thing I will say is that I don't always like to rely on pivot levels. I mean, I would prefer to draw my own support and resistance if I'm completely honest. I mean, as soon as I see a downtrend there, okay, I quite happily just, this is pretty close, but I'm looking at support probably around here somewhere, just simply because you can see resistance, resistance. Price does break out above that resistance. That resistance then becomes support here. Okay, so once I see a breakout of that support level, which again becomes resistance here, funnily enough, this would have been a potential entry for me. An aggressive entry nonetheless, because obviously we're just following in from this upwards trend. Okay, but there's a potential bull trap, a bull trap being where there are people buying. Okay, so traders seen this move upwards. You see this trend line. Some would have bought down here around this support level. Okay. Whoever bought down and around here, perhaps on this breakout there, this would have been a decent trade. See resistance, 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 triple top formation is actually a breakout there. Big breakout candle, so potential entry there. Wouldn't have been a bad trade at all. So whoever entered here, as price is coming up here and it starts falling, they'll be looking to perhaps exit their position. Then you've got traders who are trying to buy into this move, but they're buying at the high up here. So what happens is the buyers who are buying late get their stop losses taken at the same time as those who were in earlier taking profits. Just causes the shift of momentum to the downside. Okay, and then you can see that price breaks through this support line, and then that causes another the big move down that we see here. As I said, we could have traded, in fact, that support line that we drew earlier just there coincides nicely with a breakout of the trend line support. So around here is pretty much a bullseye target for shorting into this downwards trend. Okay. And we'd be in a favorable position had we entered there. We could have just put our stop loss. You can use these pivot levels for stop loss areas as well. So we could have put it here and here. Could even be locked in around here somewhere. You just don't want to risk perhaps getting taken out prematurely. So I'd probably have my stop just above the high around here somewhere. You can of course close part of the position on the way down as well, just to bank some pips. But when we get into a good trade, we want to kind of stay in it as long as possible, just depending on what the market will give us. I wouldn't necessarily always have a fixed take profit and say, okay, I must take profit at 50 pips every time, because the market might give us a lot more. Okay, perhaps targets could be this S2 level here as medium support, or this support down here. Okay, it'd be interesting to see how price reacts around these levels, because they could act as more longer term support. Then we might want to look at closing part of the position, or just keeping a keen eye on price in case there's a big reversal and the market starts to make higher lows. May consider exiting our position. But yeah, so today's action, it was simply just looking for the market direction, which, you know, you don't need any magical indicator to tell you the market's falling. It's just about time and entry, and you can time it using these pivot points, breakout of these pivot points. Some even use them as reversals. Okay, so after this breakout here, if you didn't take that breakout, you could have waited for a pullback, and then when we had the pullback up here, okay, these two candles, as I said, 1 hour candles, so plenty of price data included within them. You can always go down to shorter term time frames, such as a 50-minute if you want to time your entry, even more so. But once we see this this level of support start to hold up as resistance, this can be another signal to short, to sell. Not to mention we also have this new level of support that's breached there, so there's a lot of bearish signals there. Obviously the lower highs as well, wedge formation there, and a big breakout to the downside. Funnily enough, that happened around the same time as the New York opening, around the just after lunch London time. So London and New York are open to active trading sessions, causing, you know, meaning that there's plenty of liquidity around and volatility to jump in on moves such as this one. Okay, so what I wouldn't do is I wouldn't be looking to buy. If you get anything out of this video, hopefully it will just be don't buy against a downtrend and don't sell against an uptrend. Okay, first wait for a move and then trade in the direction of the trend. Okay, so yeah, that's it. That's basically a way to use the central pivot range indicator. The opposite would apply, of course, for an uptrend. Hopefully you found something useful in this video. I do appreciate you watching. If you could like and subscribe, that would be great and really help my channel. And I hope to catch you on the next one. Take care.